the Buy and Hire American order.
Donald Trump took office promising a heady mix of infrastructure spending, tax cuts, banking deregulation, and other incentives for US multinationals to bring back profits held overseas. Wall Street jumped in anticipation of a swift injection of cash into the American economy, though there's a risk Congress could fail to pass these measures. But all this stimulus would need to be balanced by higher interest rates set by the US Federal Reserve in order to avoid high inflation, resulting in a strengthening of the dollar. That could have serious implications for emerging markets with high levels of dollar debt and currencies pegged to the dollar.
We have seen how shocks to global interest rates can have negative spillover effects on emerging markets, and those risks are still present.
The IMF's hoping that US corporations will spend additional cash on real-world investments to boost economic growth rather than passing it along to shareholders or buying other companies at a time when corporate debt levels are already very high. The IMF is also concerned about China's credit boom, doubling in less than a decade.
The Chinese authorities continue to adjust policies to limit growth of the banking and shadow banking systems. But more needs to be done to slow credit growth and reduce vulnerabilities.
Moi, je vous le dis, j'entends vous protéger.
The IMF's Global Financial Stability Report comes at a time of rising economic populism in the West.